Alright guys, so earnings just got released. I listened to the entire conference call. NIO actually has a very good problem of too much demand, according to the CEO. And he actually said that in May, orders have exceeded production capacity. And May is actually the maximum number of vehicles that they can produce on average. So they are definitely seeking other ways to boost production above the orders. So NIO has a very good problem of too much demand, too many orders. This is, of course, very, very bullish. Now, investors have reacted negatively to the earnings report. Yes, the revenue and everything was down below estimates, and even I was wrong about the estimates. And we'll go over why that was the case. But if you look at the past Q1 wasn't that good, but if you look into what's happening right now for Q2, we are doing fantastic and doing very well. Okay, so quickly to go over the numbers: vehicle sales 1.16 billion in the first quarter of 2024. Vehicle margin was 9.2% compared to 5.1% in the first quarter of 2023 and 11.9% in the fourth quarter of 2023. Lower vehicle margins, we'll go over why that was the case. Well, it's mostly because of product shift into 2024 variants, and they had to do inventory store discounts for the 2023 vehicle models at around February, March, and that really hurt the overall vehicle margins. I should have seen this coming. I apologize for that, okay? Because I was reporting on this as well, but somehow I forgot about this. But yeah, total revenues 1.372 billion RMB, US dollars, which is a decrease of 7.2% from the first quarter of 2023, decrease of 42.1% from the fourth quarter of 2023. Okay, and then some very other interesting things. Net loss 718.1 million. This was mostly due to higher R&D costs and SG&A costs. So at R&D, they spent 396.7 million on R&D, and they do not expect future R&D to decrease. Selling SG&A costs were 415.1 million US dollars, quite high, a 22.5% increase over the first quarter of 2023. This was mainly due to the increase of personnel costs related to sales function, the increase in expense related to company sales and service, network expansion, and increase in sales and marketing activities. They are going ham with a lot of the advertising, etc. And yeah, so going forward, all right, they expect, all right, so they have 6.3 billion US dollars in the bank as of March 31st, 2024. Going forward, they expect 54,000 to 56,000 units in Q2, which means that they expect around 18,000 to 20,000 deliveries for June, even though we know that they have 30,000 orders that are to be delivered, okay? But it seems like they are capped by production capacity. They expect total revenues to be between 2.297 billion and 2.373 billion US dollars, representing an increase of 89.1% to 95.3% from the same quarter of 2023. As of recording, right now, they have 154 NIO houses, 388 NIO spaces, 344 service centers, 64 delivery centers, which seems to be the bottleneck, all right? 64 delivery centers. Seems like they can't deliver that many vehicles. I mean, I know the delivery centers are packed and they're even stuffing cars outside, but it just seems like they need more delivery centers, okay? 2,472 power swap stations, 45 million total swaps as of right now, 22,000 chargers and destination chargers. And they talked about how they partnered with many people, and the CEO was very tight-lipped about Envoy pre-orders. So one of the question was asking about aggressive promotion versus vehicle margin expectations, and they said that during the transition period, more promotions were made for more 2023 models, so that really impacted gross margins and overall reduced the average selling price of the vehicle. And we know for a fact that people were dying for inventory cars because they had the inventory car discount, and that really caused revenue numbers to be lower than expectations. It was also lower than what I expected as well. So that was also my fault as well. Increased promotion during product transition, changes in product mix, and partially offset by the decreased material cost per unit. So inventory carve resulted in lower revenue numbers. Okay, expect vehicle margins to recover to double digits, and they will renegotiate with suppliers based on product mix. They'll be flexible on sales promotion to maintain market strength and delivery numbers. Okay, so they will try to get back to double digits in vehicle margins, and that's definitely a good sign. So another question was about NIO Power. It gets 1.5 billion RMB. So NIO maintains 90% ownership of NIO Power. So 200 million, they sold 10% of NIO Power. And they said they are open to outside investment from investors, currently in an expansion phase because they're building so many swap stations, etc. But it is clearly profitable in the future with battery upgrades, grid stabilization, etc. Recently, NIO CEO talked about how one swap station in Denmark was earning 200,000 euros per year just on grid stabilization. That, of course, piqued the interest of some of the Wuhan Power guys, and those guys, they invested that money most likely based on how profitable this will be. And profitability for swap stations only takes about 60 orders per day. Next, he talked about Onvo expansion. Onvo will have 100 stores at launch, and there's no need for NIO houses or like Onvo houses, so excursion stuff or kind of cafe, bar, events, etc. It will be just basic stores. So every store will only cost about 1 million to 2 million RMB, and it won't be too much capex. Next year, they will have a medium-sized SUV, the Onvo L70. And Onvo won't have too many products, but they do expect each product to sell very, very well. When the CEO was asked about the anti-subsidy probe, he said this is definitely unfavorable, and the tariffs is of course anti-intuitive and it's anti-environment. If your plan is to shift into greener energy, but then you add extra tax on that, that is of course going the opposite direction. But the impact is limited short term, all right? So there's basically no impact short term, but long term they will make adjustments according to the tariffs. He also talked about how later this year they offer products in the UAE, so it is officially delayed. Last year they talked about UAE expansion in June, and it seems like this is being pushed back a little bit. And next he was talked about profit margins, and he says the change in cost and promotions has no material impact on profit margins, and the adjustments made on like these BAS incentives are based on the optimization and life expectancy of the battery. So definitely they see the batteries lasting a lot longer than before, so they're able to get cheaper prices with the battery asset management company, so they're able to get the cost of it down a lot. And this equity is granted for 5 years, so the total overall cost for this BAS promotion is only going to be around 6,000 RMB per car. So it's actually not that expensive to, keep on providing this pay for a month, get 1 month free BAS policy. So this is quite interesting. Next, he talked about the overall sales structure going forward. NIO is going to be focused on premium, family, and business at the 300K and above RMB range. Onvo is mainstream family market 200K. Firefly is a more boutique, smaller entry-level car, also for families at around 100K. So these will be like the smaller vehicles, sort of like the BMW Mini, etc. And of course, the big thing is they can all do battery swap. There's going to be lots of overlap with technologies and software, etc. So that is definitely going to really help boost margins for these vehicles. Currently, the Onvo L60 is being built at factory F2, and there are actually 3 brands. They share a lot of the fruits of investment, and they said that Onvo at the current pre-sale price will have very good, healthy margins, and then even with 15% margins and 20,000 to 30,000 deliveries a month, Onvo will break even. For the NIO brand, okay, they need about 30,000 deliveries with 20% margins to break even. He talked about how there's lots of stable demand and some near-term headache, which is of course the fact that in May orders have exceeded production capacity, delivery capacity. May seems to be the maximum number of vehicles that they can produce and deliver. Of course, this is a good problem to have, but it is a problem nonetheless. We want more deliveries, but he is very confident in future delivery numbers. And starting in September, Envo will, of course, start delivering vehicles. And so far, he said that Envo did not affect NIO negatively. Like, NIO is not losing orders to Envo. In fact, it is doing the opposite. It is giving NIO more recognition. Okay, and they are looking to increase production capacity at NIO's factory with double shifts, etc. And currently 20K capacity for the factory to produce NIO cars does not include Envo. So that means that when they start delivering Envo, it's not like Envo plus NIO, they're capped at 20,000 per month. No, it's just NIO so far. Right now, currently, they're being capped at 20,000 per month based on production and delivery. But then Envo will have its own production, so it's not going to affect NIO. So yeah, forecast in R&D is about the same as 2023, and overall, I think these numbers are pretty not that great. All right, but definitely going forward, things are going to get a lot better.